All right, guys, how's everyone doing? Sorry being a little late here. I was having some technical difficulties. Let me know if you can see me and hear me okay. You should see me, and you should also be able to see my screen, which has a bunch of charts here. In the chat box here, all right, one second here, guys. All right, there we go. Okay, good, good, good. You guys can see me okay. Let's talk about, before we get into what I want to talk about today, which would be picking stocks from different sectors, let's get into what happened today. So I'm going to pull up, see here. All right, so I'm going to pull up some of the stocks we're in. Before we do that, let's quickly take a look at SPY. We know what's been going on in the market here. It has been kind of extended, and we're starting to see a pullback. Now, some of it, a lot of it is probably some geopolitical stuff, especially related to China. And there's some other stuff going on that might have the market a little concerned. In the past, it has pretty much ignored that stuff. So this is interesting that we're pulling back here. There could be other reasons for it as well. What's concerning here is the same things that happened before. So maybe it's not that big of a deal, but we did get a pickup in volume on the way down. Now, again, we got a nice recovery. If you look at the Qs were down 0.28%, but closed near highs and put in a pretty strong candle at the 9 EMA. So someone here is saying they can't see my charts. Let me know if everyone else can see them. I've gotten some other messages here that you guys can see them. All right, so the Qs look pretty good today, and the Qs is more related to a lot of what we're looking at. Looks like most of you can see it. So Davey, if you can't see it, then there might be something on your end because most people are able to. And then IWM was really strong today. So a little bit of a mixed bag. Now let's talk about our current positions. Facebook held up pretty good. Again, our entry was around 192.90, 193. Pulled back slightly. We're at 197.50. So everything's looking good here. Hopefully it just consolidates here. If we look at Baidu, now Baidu, I got a lot of questions about Baidu today. What was I doing with Baidu? Those of you who are newer here probably don't know this. Well, before I even get to that, Vineet has a really good tip here. If you guys are watching this on the app and you can't see my charts, he says to swipe left and you'll be able to see the, I don't know if it's the charts or the chat, but thanks for the tip, Vineet. Okay, so this is the gap down strategy for those of you who didn't know. Now, what I do anytime I'm dealing with a gap down that blows through where my stop was, I give it some room and watch throughout the day and see if the levels hold without decreasing my risk too much. So what I did here was, the stop was at the entry level of 263, right around 263. And I wanted to see if that level held. Now it did drop down to about 257, which didn't increase my risk too much. And when we think about it, we had already moved the stop up to entry. So all we were doing was really going back to the original stop. So it wasn't really that big of a deal, and I was willing to hold through. And we did get a hammer forming. So this is what we wanted to see. Now the key is going to be tomorrow. Do we get continuation? If it starts to falter tomorrow, you can bet I will probably get out. So we got what we wanted here with that hammer. Now, if we can get continuation, hopefully it gets back on track. And I like that the volume didn't pick up too much. So the strategy so far with Baidu is working. If it had closed, if the candle had been like this candle when this one had gapped down, I would have been out by end of day. But since it recovered, that's exactly what we wanted to see. AAXN held up well. There were concerns through the day, but then we got the hammer by the end of the day, and we're pretty much back at entry level. Entry was at 65.80, we're at 65.54. So holding up well. So Facebook held up really well. AAXN held up really well. Baidu, I mean, it dipped down, but at least we got the hammer today. And then Huya, I really wanted to kind of hold on because I have a feeling this thing will bounce back. But you know, the risk is if it gaps down more. Now remember, this was a speculative play, and there might be some confusion about that. I got a nasty Twitter remark from probably a Trade Report member because they knew I was in Huya. But if you know, whoever left that comment, read the alerts, because I said it was a speculative play, and I also said we were position sizing small. So if you screwed up on it, that's pretty much on you for making a stupid trade. But what we were doing here was, remember, we talked about it when we entered, speculative play, wasn't really a setup, and we talked about that. It was essentially playing for a move, a pre-move break of the 50, and if it broke 50, not the 50, but 50 range, if it broke that range, we would likely get a big move up. Obviously, that didn't happen. We position sized really small, so that's good. Ends up being, I think for me, you know, with this position sizing, it ends up being a $600 loss, which is really insignificant. You know, when we consider 1% risk would be over 1,000, this was a small risk for a high reward. And that is, you know, if you're professionally trading, that's what you should be doing, is focusing on the risk, not the setup. And we had a huge risk reward, even though it didn't work out. So stopped at a Huya, and then LABU. We've been talking about LABU for a while. We want to see a break of the range, and we got that today. So that's good. You know, biotech has been very strong in here, held this level as the market had been pulling back. LABU showed a lot of relative strength. And if you guys have any questions about the stocks that we're trading right now, this is your chance, since it's the mentoring session. You know, I try to explain it the best I can, but if there's something you're not understanding, let me know and we'll go over it. We'll go over it again. So if you have any questions, shoot a message in the chat. What I did with LABU was play for the break of this range here. This is what we were talking about in the report. Now I waited till the end of the day, and whereas maybe I could have got at 105, you know, in the 105s, I got in around 106 something. I was willing to wait just in case, you know, there was a weak market close and we got to pull back down. So we got entered in the 106s. We got a nice pop towards the close, you know, closing at 107.68. And now we're playing for the top of the range here, and that will give us close to 2-to-1 if it gets to the top of the range. So that's the idea here behind LABU. We've got some nice, better volume than the market as this thing has been moving up. Okay, so does it look like there's any questions about the trades we're currently in? If you do have any, go ahead and ask them. Otherwise, I will get to the topic for today. All right, Asha, I didn't get to place the trade for LABU. Is it good? I get this question a lot. So this is a good time to address it here. The question I get is, you know, sometimes I'll make a trade, you guys aren't, you know, checking your email at that time, or you're not in front of the screen, which, you know, a lot of you obviously are working full time, so maybe you miss an alert. The question I get a lot is, can I take it the next day? The answer is, if nothing has fundamentally changed in the stock or the price and risk reward we're going to be getting. So if you can still get the type of risk I'm getting, it's okay to enter. And if nothing has really changed about the setup. So for instance, with LABU now, tomorrow, if it pulls back even to 105, that would be fine. Go ahead and enter. If you know, anywhere in this range, you guys know we're focused on risk reward. For swing trades, the exact, you know, 20 or 30 cents doesn't really matter. You know, for a day, if you're day trading, it matters a lot because it totally skews your risk. But for us, whether I enter at 106 or 105.50 really doesn't make a difference. So tomorrow, if this thing opens at 105.70, the market looks okay, the stock looks okay, go ahead and enter if you missed it. Now, if it opens at 108, 109, I probably would not, because then it's going to mess up the risk reward. So The answer is if it looks similar to where I entered from, go ahead and do it. Otherwise, don't. Uh, how much how much emphasis do I play on candlestick patterns? Place on candlestick patterns. Depending on the setup, it can be very important. Sometimes it's not. You know, obviously with the LABU trade, it's not really candlestick pattern, it's break of a range. But let's say we were shorting here and we were shorting this extended move. It's a failure of the high here, and then we get this bearish engulfing. Here, this candle pattern is very important. And that, you know, obviously would have signaled a good short here. You know, if you were playing an oversold trade and you've got the hammer here, this hammer pattern is very important at this level. So the answer is it depends. Within the what setup you're trading. I'm trading a break of a range here on LABU, so it didn't matter at all. Roku, a recent trade we took, remember here, you know, we got the breakout pullback and we got this hammer at the pullback range. So this hammer candle was very important here for our entry here when we traded Roku. So within the setup, generally speaking, if it's pattern based, then the candlestick pattern matters. If it's a range break, it doesn't matter. So for example, if you were trading Roku on the pullback, this pattern mattered. If you were trading a break of the range and you entered here, then a candle pattern would not matter. Okay. Paneet asks, what is an Ichimoku cloud strategy? You know, I don't memorize the names. I just have the patterns that I'm looking at memorized. We don't get points for trivia contests. Let me just Google it real quick and see what it is. Ichimoku cloud. Okay, let's just see what it looks like, and I'll tell you if I use it. Okay, I don't like the way stock charts is showing the pattern. 1 second, let's take a look here. I can't really even make sense of what the pattern is. Price closes below the blue. My guess is, just from looking at it, I probably, without naming it, I probably do trade it here. This looks like a good. Okay, to me, what it looks like is basically a confirmation, the way I think of it. So it really depends how you think about it. What I think of as this is basically when you have something pulling back or beaten down, you get a kind of a basing and then a break from that level. That's what it looks like we're seeing right in here. And I trade that a lot. I don't call it Ichimoku cloud. You'll basically hear me say something like, we're getting confirmation of this support level, or it's beaten down and now we're getting a confirmation move. So that's the way I tend to look at it. I don't call it that, but I think I am trading that pattern. Okay, I was curious about your Huya buy yesterday when you bought it. It seemed extended. Right, it was extended, and we talked about that. So let's get back to Huya here. It's been extended through this whole thing, and sometimes with these stocks, what I was doing here is basically what I laid out. I didn't want to wait for a break of that 50 level, because once it breaks that 50 level, it can move very fast. So my expectation is if and when this stock breaks 50, we're going to get a very quick move to 55 or 60. So I was willing to get in a little early, very small position size, and risk about 3 points. So think about what I was doing. I was risking $600 with the potential to make 13 points. So that would have been 2,600. So I really don't care about the pattern. I know I'm going to lose a lot on this. That's why I called it a speculative trade. The reason I called it speculative were multiple reasons. One, it's a speculative stock. Number two, it was extended. And number three, the pattern wasn't there. So anytime I say in an alert, this is speculative, you have to know that it's not a classic setup we're trading, and you may want to pass on it. But anytime I do say it's speculative, I am taking a small risk and position size on it. So I only risk $600 with the potential. My focus was more on what I could make. So $600, I could make 2,600. So let me just, I figured it out at that time, but let me redo it. So 600 divided by 2,600, 20, 23% win rate. Okay, so I'm basically getting 4-to-1 on that trade. So to break even on that trade, 23% of the time I have to be right. Obviously, I was wrong here. The next 4 times I trade something like this, I only have to be right once just to break even. And generally, I'm going to be right more than that. So to be profitable on this setup, and we're always thinking about not this specific trade, we're thinking about, the next 50 times we take this trade or 20 times we take this trade. If I'm right, just 4 out of every 10 times I take it, it's going to be a very profitable setup. So that's the way I'm thinking about this. 600, 2,600, 23% break even in terms of, when I trade this, I only need to be right 23% of the time. I know I'm probably going to be right more than that. So it's going to end up being a profitable setup. And that's thinking about your account and risk on a macro level. Those of you guys who are following the 30-day challenge, I talked about risk on a macro level. That's one of the ways we're thinking about our accounts and trading on a macro level. If Huya goes back up tomorrow, would you think about getting in? Definitely. So I'm not going to be deterred just because I lost this one time. So if Huya goes up tomorrow, and maybe this time I'll wait, I'm going to do one of two things. I was going to talk about this in the report, but if it pulls back, holds the 9, and shows strength, I will definitely get back in. Or if it breaks that 50 level, this time I think now that it's consolidating here, if it breaks 50, I'll jump in early in the morning and be willing to see if it gets that big move. So we're basically going to watch on Huya now. How does it handle the 9? How does it handle the 50 level? These two levels are potential entry levels. Yeah, China stocks got hit today. They've been on a big run. RL, we're going to talk about RL in a second, Guillermo, because I'm going to use retail. Why don't we'll just get to it now. RL here, entry single hammer. Okay, Guillermo's question is this candle an entry signal on the hammer, along with price support and a strong sector? Small risk, good reward, or would it be better to wait for a remount of the 9 EMA? Because this thing is so extended and this wasn't the strongest hammer, it's basically just within the range, I would probably wait to see confirmation here. So if you entered here, that's fine. At least your risk is small. I'll probably place a stop right here, 3 or 4 points. And if you're risking 4 points at 139.40, you do need to play for a break of 145, otherwise you're not getting a good risk reward. But there is a lot of room to the downside here, so I would probably want to see confirmation on that. What do you think about FIT for a swing tomorrow? I have been paying attention to FIT. I like the pullback here. So this is another one where you could enter here on this hammer. But I'd probably wait to see if there's some confirmation. If this starts to move and we get to, like, say 730, that would set up, I think, a really nice run. So Fitbit looks good. I was actually just going to put it on our focus list tonight. Okay, all right, great questions, guys. Let's talk about picking strong stocks from strong sectors. So last time we met for one of these mentoring sessions, we talked about breaking down technology into these different areas. Now let's talk about. We'll move away from technology. We could just pick. Actually, why don't we can go ahead and do that. We'll use hack. Okay, so we've identified hack or cybersecurity as a strong area. So now the question is, we know cybersecurity is a strong area. You guys know that PanW and Cyber have been showing up on our watch lists. Why did I pick those two cybersecurity stocks? So let's dig into what we are looking to do here. And here I'll pull up a list of cybersecurity stocks, and we'll get a 5-day sector sort here and a 30-day sector sort or stock. We'll sort the stocks here. Okay, now let's talk about some of the things. We're not going to get into the full sector analysis. I actually will be going over that in the boot camp tomorrow or the day after. So my boot camp classes are this evening. I also go over this with my mentoring students in really in depth. But let's just focus on, let's assume we know the sector we want to be watching. Now, how are we picking the stocks that we want to be trading within the sector? So first, finding the best stocks in these strong sectors. Here's what I'm looking to do. Number one, I want the stocks showing the most relative strength. Essentially, within the sector, if you took the sector's plot, which stocks are beating the sector average? Those are going to be the relative strength stocks. We want those. Those are the best stocks in that sector. Number two, I want stocks with good volume patterns. Volume patterns are very important. They show that the stocks are being bought up by us, usually by the big institutions. That is what we want to see in a trending stock. Number three, the best overall setups. Now, that doesn't mean it has to be set up to trade right now. I'm just building a list of stocks. But I do want to see some kind of really nice pattern forming in that stock that I can potentially trade. And number 4 and 5, these aren't requirements, but I like stocks that have a lot of short interest. Those of you who are not familiar with that, if you've been following me for a while, you know this, but we like stocks with short interest, which can be kind of counterintuitive or seem illogical to some people, especially newer traders. Like, why would you want to trade a stock that's being heavily shorted? Because doesn't that mean it's not a good stock? That's why people are shorting it. But if you've been trading for a while, you know that the stocks that are heavily shorted, when they start to move up, shorts get scared, they pull out. When they pull out, they're actually creating demand, and the stock will go up, and that's called a short squeeze. So we like that. We want to participate in a short squeeze. And a lot of stocks we trade end up having some short interest, which helps us helps the stock move forward. And then finally, we like stocks that aren't very heavy. So you guys have probably noticed, just about anywhere you go on Twitter, you go on websites, you go on people's services, just about everybody's trading Apple. And you don't see me trading Apple very much. Apple is a very heavy stock and doesn't tend to move like it used to. I would much rather trade a lower float compared to Apple, like say Netflix, Google. Let me just show you guys here. Apple's float size is 5.1 billion. That is a very heavy stock. Now let's look at Google. Google, I mean, it's pretty big, but compare it to Apple, it's only 300 million float size. That means it has the potential to move much faster than Apple does. It takes a lot more volume to push Apple. Look at Amazon here. Amazon's one of the biggest companies in the world, but its float size is only 300 million. So again, it can move much faster than Apple can. That's why, a lot of you guys, especially you small account traders, you focus a lot on the price. Like, geez, I can't trade this stock. It's 1,700 and I only have a $5,000 or $10,000 account. You're better off sometimes trading this lower float stock that is 1,700 and you can only get 5 shares because it'll move in a bigger percentage gain than some of the stocks that are like $50 or $20, but they're a heavy float. So really pay attention to the float size and the kind of percentage gain you can get on a stock. Facebook, it's pretty big at 2.4 billion, but it still moves fast because it gets a lot of volume pushing it. Then finally, which one are we forgetting of the FANG? Google, Amazon, Facebook. I think we did all of them. Netflix. Netflix again. The three are at around 400 million, and then Facebook is the big one. All right. So we like these things: relative strength, volume patterns, best setups, short interest, and float. Now, a common mistake people make when they're building their lists, one, they have a fear of volatility. They see a stock that's made a big move up, big move down, big move up, and they stay away from it. And they go for I see this a lot, they go for the safe kind of stocks. Like for instance, they might pick a big stock like Pepsi or Coke or Disney rather than one of these volatile stocks. As a swing trader, we're going to make more money trading these volatile stocks, even if they can go down. We know how to manage our risk, so it's okay. If the thing could go down 20, 30 points, that doesn't mean we're going to lose all that. We know how to manage our risk. So go with the most volatile stocks in the sector you're trading, assuming it fits all the other things we're looking for too. Don't just trade volatility for the sake of volatility, but volatility is important. And don't choose the laggard or the lagging stock. That's what I see a lot of people want to do this. And I'll tell them pick the leader in that sector, and they always seem to go for the one that has been lagging. And that's not the way it works. Usually the stock that has been leading, after a consolidation, it is going to be the stock that leads again. So for example, there have been so many times here with Netflix where you could have said to yourself, I'm not going to trade Netflix. I'm going to trade a different media stock because Netflix is look, Netflix was extended at 80. It was extended at 120. It was extended at 140, 180, 200, 300, 400. It's been extended this whole way. And if you were afraid to trade it and kept going with, Comcast or something like that, you would be lagging big time because that stock has continued to lag compared to Netflix. So go with the winners, even if it feels like their moves have been too big. They're going to continue to lead. So don't choose the laggards and don't be afraid of volatility. Big mistakes here that gets people, results lagging. Okay, key points to remember here. We just talked about this. Remember that what is the strongest is usually going to continue to show strength. So choose strong stocks and don't worry about a setup. So for example, if let's say I was just starting working on my watch list right now, and I look at Netflix and I say, you know what, I like the stock, it's one of the best stocks, but I'm not going to put it in because it's not set up right now. I can't trade it right now. You're building your watch list, and you're going to watch this stock every day. Eventually, it's going to set up for you. So just build a list of strong stocks, but don't worry about the fact that you can't trade it today or tomorrow. Maybe you don't trade it for a month. That's fine. At least you've got that list of strong stocks to choose from. And then analyze your stocks daily. Go through your list, flip through them. You see my new focus list every day. I'm going through tonight. Kohl's will probably be on the list if it's not already. BKE, another good retail stock here. RIG led today, but I needed to go over the 250-day moving average to get on our list. But so you can see what I'm thinking about now. When you see these stocks end up on my focus list, they come from a watch list where I've done all this and I've broke down the sector, and this is what I'm thinking about right here. So this kind of gets you behind the scenes in my head exactly what I'm thinking about. Obviously, we can break this down further and really get into this stuff, but this is the overall stuff you're going to be thinking about when you're building your watch list, you're building your focus list, and you're thinking about stocks to potentially trade. So let's go ahead now, after all that, pull up Hack, and let's look at the cybersecurity sector. And I'm going to have to add my columns back in here. 5-day, and we'll start with the 30-day. All right. So number one on the list over the last 30 days is NTCT. So NTC, sorry, NTCT. There we go, tongue twister. Now, this has led over the last 30 days. So you might be asking, Why have I not put that on my list? It's not a very volatile stock, even with this big move. It's moved 3 points over the last month. This is a volatility indicator here. It's only at 27. Not really the type of stock I tend to trade. I like stocks that are more explosive. So I wouldn't put this on my list. MOBL, same thing. It actually is a little more volatile. It's a lower price stock, which can be good. It is low float. The overall pattern, I've been trading these cybersecurities that have been in a strong uptrend. This one hasn't been. So over time, it's been lagging. It actually has led more recently. So maybe this is one I could reconsider, even though it's not on my list right now. Now look at the difference between that and cyber, and you can see why I've chosen cyber. Cyber has been crushing it, and it's, if this sector continues to move, it is going to continue to lead. So this is the type of stock I like to see here. So cyber, definitely on my list. It fits the parameters. Low float, 34 million. Let's look at all these things we talked about. Relative strength, it is leading the market. Volume pattern, strong. Big green, you can't really see it here because I have the chart spread out, but bigger green than red. Volume pattern has been good. Overall setup, it is trending, and so that's good. Short interest, I don't have the short interest numbers here. Let's actually pull up FinViz and take a look at the short interest. All right, so cyber has not a whole lot of short interest. It does have some at 3%. I usually like this number to be a little higher. 10% is a lot. If it's at 6 or 7%, that's pretty good. So surprisingly, it doesn't have a lot of short interest, but that's okay. It's not required. It fits all the other parameters we're looking for. So cyber, definitely a good stock to have on our list. BAH, now this one is a little bit of a surprise to me. One I think we could consider putting on our list. I think, okay, the reason I like the overall pattern. The reason I don't have it on our list, it's not very volatile. So, I'll just go ahead and watch cyber. I don't need a ton of these. I'm going to make more money on cyber than I could with BAH. SAIC, not a good overall pattern. And if you guys have any questions about these, basically we're seeing the same theme here. Even though I like a lot of these, I'm not seeing anything that I like better than cyber or even close to cyber. RDWR, good looking stock, good trend, but really slow moving, not very volatile. FEI, if this ever did get up over the 50, this one is volatile. I tend to like the way it moves. Let's skip through here, and you can see why. Now, PanW and cyber are the only two I have from this sector. Even though the sector is very strong, it's filled with a lot of stocks I probably wouldn't trade. So the only two that I'm really focused on right now is PanW and cyber. I should add QLYS. This is a really strong stock as well. Look at that volume pattern, very low float. I think it does have some short interest, and it's already run from 70 to 96. So let me put this one in my notes. We're going to add QLYS to our cybersecurity list. So PanW, QLYS, and cyber. Okay, all right. So that kind of shows you what I'm thinking about, how I'm picking the stocks when I'm looking at a sector. So if I tell you guys, retail is hot, and then here are the retail stocks. Lately I've been picking Lulu, I've been picking BKE, Urban, Kohl's, Macy's. These are the factors that are coming into play out of the 100 plus retail stocks that I could be choosing from. Why are these 6 to 10 stocks always showing up on our focus list? This is kind of gets you behind how I'm picking these things. Okay, so that's what I wanted to go over today. Let's see if you guys have any more questions. Okay, Tiffany, how to psychological barriers out of trading. I think you mean how to get the mental uh, aspects out of your trading and trade, like you should be trading. That's probably one of the biggest hurdles. What I would say is try to, there's a lot we could get into that we can't fit in right now. But if there was, a couple of things I would say, create rules and habits and stick to them. So I have a process and routines I use um, every single day, and I'm just on point with these things. And then I have a style of trading, and you guys see one style in the trade report. I have more aggressive styles. I day trade as well, but for every style, I basically have a set of rules and I stick to them. And what you guys have probably noticed with my trading in the report, I tend to not worry about, and this is part of the process here, is knowing what you do works. So, if I get caught in a drawdown, if I have a losing trade, when I went through this winning run, it didn't change anything I did either. Sticking to the plan, sticking to the rules, set it and forget it when I'm in a trade, having these processes and routines. Once you have that, it really helps with the mental aspect of trading. IPO, is that also a plus? Davey, it really depends on the market. Davey is also someone I've actually mentored. I don't know if we've gone over the IPO stuff, but there are specific things we look for in IPOs, which we've been seeing now, but IPOs are a plus in certain markets. So every year or two, we get these hot runs of IPOs. 2016 was the last time. Let me pull up 2016. So in 2016, you really wanted to be focused on IPOs. If you look at Twilio here, Twilio, those of you who are report members from back then, you remember Twilio making this huge run here. Basically, what we're seeing in the China stocks, if you want to look into the future, what's going to happen with these things, because right now it feels like these things are going to run forever, they will not. Look at Twilio. Twilio, what you're seeing in Billy, what you're seeing in Huya, what you're seeing in IQ, Twilio was that in 2016. Look at that huge run, over 100%, and then boom, all came down. Now, when we go, there are a lot of factors where we can kind of game this stuff, which we don't have time to go over now. But that's one of the things, the types of in-depth stuff we go over in mentoring. ACIA, same thing. Look at that in 2016. There was another stock, LN. I'm forgetting some of the other ones, but it was a hot IPO market, just like we're seeing now. So the answer to your question is it depends, which is probably not the answer you want, but if you notice that IPOs are really making big runs, then it is a very big factor. Okay, would you choose ICPT? It's a crazy stock that moves so much daily, even during consolidation. Let's take a look at it. Now, when I say volatility, I'm not talking about intraday volatility, Tiffany. I'm talking about volatility over a trend. ICPT, I guess you could trade it as a bottoming formation. Probably not anything I'd really be focused on right now. And I think there are better biotech stocks to choose from right now. Maybe it's bottoming here. Okay. I like MTC. Davey likes MTCH. Let's take a look at that one. Yeah, looks good. So gap down strategy. I would really like it if it broke. I mean, it looks good here, but if it ever breaks this breakdown level and totally invalidates this move here, that would be a really nice setup. Okay. Krista, what is the volatility measure? It's just price volatility, and it's an imperfect volatility measure because all it's measuring is volatility over a period of time. But let's say a stock was at 30, it ran down to 20, went to 40, and back to 30. That would be high volatility. What I like to see is volatility in a trend. When it's trending, how volatile is it? So it's not perfect. So you have to look at this price volatility measure, and you can just right click here, hit edit toolbar, and go to the plus sign and just search price volatility, and it'll come up. can you please walk me through pulling up short interest on Finviz? Sure, it's real simple. All you need to do is, okay, all you need to do, put the ticker, whatever tickers you want in here, go to screener, put the tickers in, then go to ownership. Under ownership, you're going to get the float size, and here you get the percentage of float short and the short ratio. These are the two important things. Percentage of float short is the percentage of this float that is being shorted. So what this is telling us is, for instance, Grub's 89 million, let's just for round number sake, let's say it's 100 million and it's 13% of it is short. That means 13 million of that 100 million float is being shorted. So that's pretty heavy. So that's what this number is telling you. The short ratio is a calculation that divides the percentage of float short by the volume, and you get a short ratio. So obviously, the higher these numbers are, the better. So, Grub being at 8 and being at 13% is very good. Shutterfly, Shutterfly is on our list. Here's one of the factors. Now that you guys can see behind what I'm doing, it's low float at 33 million. It has a lot of short interest as well. So when it runs, these shorts get scared, they pull out, and then the stock starts to really fly. Okay, Paneet asks, he or she usually has a difficult time finding stocks to trade between $1 and $10. I kind of touched on this earlier. You don't need to be limiting it to $1 and $10 because you have a small account. That's the wrong way to be thinking about this. You need to be thinking, what is the percentage gain I can get? If you've got a $50 stock that can move 20% over a period of time, that is much better than a $5 stock that's going to move 5% at one time or 10% at one time. So don't get too caught up with the $1 and $10, the low priced. What do you think about WDay's chart? I think there are better stocks. It's in a good sector, but I think there are better stocks within the sector that you could potentially trade. Do you set your stops in advance right after you buy? I have a plan when I enter. So I guess your question, Gina, is because I often give a range. Yeah, there doesn't have to be an exact price. If let's say WDay, let's say I entered here at 129.50. I'm thinking my stop's going to be at 125. It doesn't have to be exactly at 125. I will give it a little range there, and then as it starts to pull into that level, there are things I'll look at to see whether I want to get out towards the top of that range or towards the bottom of the range. But there is a definite plan, and the difference between 50 cents does not make much of a difference, unless you have 10,000 shares. I don't know why that would make you think I don't have a plan. But yeah, you're right. I do monitor it, and I do set it and forget it. And then when it gets within that range, that's when I start thinking about it. Now, if you want to place a hard stop at an exact level, that's totally fine. You can do it that way. What is the best way or resource to study setups or entries? So within what I'm doing, if you just watch me every day, this is what I've found. In the beginning, some of this stuff might be a little difficult for you, but what I found is once people start watching me for a couple of weeks or a month, they really get a feel for what I'm doing and have a good understanding then as I describe the things I'm doing. Other than that, in terms of setups or entries, you could do the boot camp, and I go over swing trading setups in there. I do personally mentor where I go over everything I do, so you could get it that way. But I think, for the most part, if you just watch me every day, you're going to pick up everything. And now we've got these mentoring classes. So if you have any questions about what we're doing, just let me know and I'll go over the setup with you. For trailing positions, how much profit should I give back? If I gave back 500 in an attempt to make another 500, would this make sense? I'm I'm really not looking necessarily at dollar amounts. I'm looking at what makes sense on the chart. So where should it pull back to? But obviously there is a point where you want to lock in that gain. So like let's say you're at 3-to-1 on the trade. I definitely would not let that trade get down to 2-to-1. And notice I'm saying 2-to-1 and 3-to-1. I'm not talking about dollar amounts. It's more your risk. You know, am I getting 1R? Am I getting 1.5R? Am I getting 2R on the trade? You pay attention to level 2. I do not pay attention to level 2. I've experimented with just about everything, and what I found was level 2 did not give me much of an edge. I don't think Kunal uses level 2 for his day trading either. Now, that being said, there are tons of ways to trade. You know, everyone has a different style. I have trading friends who could not trade without level 2. So you can experiment with it. And what I would say is only use it, and this goes to anything, only use a strategy if you feel like it gives you an edge. Sometimes people just throw things on because they feel like they need to be doing. You have to study it and see if it gives you an edge. If it is giving you an edge, then continue to do it. All right, guys, looks like that's it for your questions here. So we'll have our next mentoring session in 2 weeks. So again, we're going to do these. This is our second one. And I think there's in the Swing dashboard, you should have access to the recording of the first one. And we're going to keep recordings of all these because there's a lesson within each one of these. So you can go back to the first one if you missed that, and obviously you'll always have access to this one. So you can go back and study. We'll have the next one in 2 weeks. These are going to be every other week, unless something happens with the schedules, but we will at least always do 2 a month. So see you guys next time, and I'll see you guys with the trade report either tonight or tomorrow. So talk to you guys later. Bye-bye.